Hello and welcome. In this video, we will discuss a very important topic in business called the forms of business organizations. From an accounting perspective, the three most common forms of businesses are the sole proprietorship, the partnership, and the corporation. Along with these three main forms, we will also discuss two other forms, which are the limited liability company and the S corporation. We will focus mainly on the advantages and disadvantages of those business organizations. So, let us start with the sole proprietorship.
Advantages of sole proprietorship. Number 1. They are easy to form and the owners enjoy sole control of the business profits. Number 2. The owner maintains 100% control and ownership of the business. And lastly, does not require separate tax filings. Instead, an owner reports the net income or net loss from the business on his personal income tax form.
Your small business, in the form of a sole proprietorship, is personally liable for all debts and actions of the company. Therefore, all of your personal wealth and assets are linked to the businesses. It is much more difficult to sell ownership in an LLC than in a corporation, and for a sole proprietorship, it is basically impossible. As a sole proprietor, you'll have to rely mainly on friends and family who already know and trust you. It is extremely unlikely you'll find a venture capitalist willing to write a check to invest in a business that has no formal company encompassing it.
Fourth, the business continuity ends with the death or departure of the owner. Fifth, there are a few fringe benefits. Sixth, has a limited managerial ability which can lead to management problems. Seventh, limited growth potential. And lastly, lack or absence of specialization.
Next is the partnership.
Advantages of partnership. Number 1. Less formal with fewer legal obligations. The partnership business does not need to complete a corporation tax return, but you'll still need to keep records of income and expenses. Number 2. Easy to get started. Partners can agree to create the partnership verbally or in writing. There's no need to register with the company's house, and registering the business partnership for taxation with HMRC is quite simple. The partners will also individually need to register for self-assessment. Lastly, number 3, sharing the burden. The partnership can benefit from companionship and mutual support.
Disadvantages of partnership. First, there is unlimited liability for both partners. Second, each partner is jointly and severally liable for the partnership's debts. Third, the business has no independent legal status. Fourth, there is a potential for differences, disagreements, and conflict between partners, especially in decision making. Fifth, the business automatically dissolves upon the death or departure of one of the partners.
The next form of business organization will be the corporation.
Advantages of corporation. Number 1. Corporations' shareholders are not liable for any debts incurred or judgments handed down against the corporation. Shareholders only risk their equity in the corporation. Number 2. May be able to raise additional funds by selling shares in the corporation. Number 3. Some corporations may be able to elect treatment as an S corporation, which exempts them from federal income tax other than tax on certain capital gains and passive income.
Disadvantages of corporation. First, there is a double taxation requirement. It pays taxes on its income and dividends. Second, it complies with government protocols and rules. Thus, they are not able to do business at their own will. Third, since it is regulated by the government, it requires many paperwork and requirements that are in line with the articles of incorporation. Fourth, with many requirements needed, there are also many fees to pay. Thus, it is also expensive to form. And fifth, Creating a corporation is also more time-consuming compared to the other forms of business organizations.
The fourth would be the limited liability company.
For taxation purposes, income from your business can be treated as your own personal income and is therefore not subject to certain federal taxes for which corporations are liable. Some legal structures limit the number of people allowed to file as owners. With an LLC, there is no limit to the number of owners. An LLC can have one member or hundreds of members. In an LLC, the amount of money that owners invest into the business does not need to equal their percentage of ownership. So you can make a deal with an investor to have them finance half of your business without necessarily owning half of your business. Unlike standard corporations, LLCs are not required to have a board of directors, annual meetings, or strict book requirements. This can free up a lot of time and stress to let you run your business on your own terms.
Disadvantages of limited liability company. First, difficulty to build capital. Second, higher fees to pay compared to a sole proprietorship. Third, difficult and more expensive to operate compared to a sole proprietorship. Fourth, it is regulated by the government. And fifth, it also pay higher taxes.
Lastly, the S Corporation.
Advantages of S Corporation. Number 1. An S Corporation protects the personal assets of its shareholders. Number 2. An S Corporation does not pay federal taxes at the corporate level. Number 3. S Corporation shareholders can be employees of the business and draw salaries as employees. They can also receive dividends from the corporation, as well as the other distributions that are tax-free to the extent of their investment in the corporation. Number 4. Interests in an S Corporation can be freely transferred without triggering adverse tax consequences. And lastly, number 5. S Corporation may help a new business establish credibility with potential customers, employees, vendors, and partners because they see the owners have made a formal commitment to their business.
Disadvantages of S Corporation. First, it is regulated by the government. Second, since it is regulated by the government, it is required to comply with the needed requirements that are in line with the Articles of Incorporation. Third, there are stock ownership restrictions, just like having only one class of stock and can have more than 100 shareholders. Fourth, its calendar year must adapt to its tax year. Fifth, less flexibility in allocating income and loss. And sixth, taxable fringe benefits.
And that is it for the advantages and disadvantages of the different forms of business organizations. Thank you for watching!